Now, we have looked at intra head, which is within the head, right? We have looked at this. This is, say, business. Within the head, if there is this one source of income and another source, this is loss, this is profit, this can be adjusted. That's called intra head. And the next one that you saw was, this is business, this is house property, separate head, and there is a loss here. This can be adjusted with house property. These all we are talking in the same year in which it is happening, same year. Okay, that is what this is. Interhead, please be clear, interhead. This is intrahead. Intra means within, inter means between. Okay, now let us move forward. Now next is, up to this we saw carry forward and set off of losses. Now what happens if the losses could not be set off under the same head or under different heads in the same assessment year? Such losses are allowed to be carried forward to be claimed as set off from the income of the subsequent assessment years. All losses are not allowed to be carried forward. Only the following losses are only allowed to be carried forward and set off in the subsequent years. So you cannot assume that everything will be carried forward. You can only carry forward. Now, first, what did we do? We did set off in that current year. Still, there is some loss continuing. Therefore, you have to carry forward that. Now, what can be carried forward? These can be only carried forward. Only these. That is number two, rule number two. What are the things can be carried forward? That is rule number two. But there are certain compulsory requirements. If you have to do that, there are certain mandatory requirements. What are the things? Number one, you have to do compulsory filing of return. If you don't file the return, you cannot carry it forward. So, although file above losses are allowed to be carried forward, but the carry forward is allowed only when such loss has been determined in pursuance of the return of loss submitted by the SC on or before the due date of filing the return under section 139(1). Normally this thing is 31st July and 30th September. This year everything has been extended to 30th November. So that's why we are little easy because of COVID and all that. Most probably we are expecting it to be further extended. However, loss under the head income from house property can be carried forward even if the return is not filed within the due date. So again, within that there is an exception. First they are saying if you want to carry it forward, you have to file it before the due date of filing the return. But for loss under the head income from house property, there is no problem. Even if you have not filed the return or you have filed it late, it doesn't matter. You have to file the return, of course, but I'm saying even if you have filed it beyond the date. Although submission of return of loss on or before the due date under section 1 is compulsory for carry forward of losses mentioned under B2E above, but this provision is not applicable for depreciation losses, that is unabsorbed depreciation, because it's coming under section 32. There are two conditions which is to be satisfied before loss is to be carried forward. Number one, the return of loss must be submitted on or before the due date. And secondly, such loss has to be determined by the assessing officer. Now, this determined by the assessing officer at the moment, because of e-filing, it's not happening. Earlier, it was not like that. When manual filing was there, they used to do an assessment order accepting that loss. Only then you can carry it forward. But today things are all different, but yet the provision still says that. Provision still continues to be like that. So two conditions. One is that it has to be filed before the due date, except of course the house property thing. The other one is the assessing officer has to determine the loss, then only you can carry it forward. Now, one by one, we look at house property, business, etc. What are the rules for carry forward and set off? Carry forward and set off. So, first one is house property. A loss under the head house property, if it could not be set off in the or wholly set off in the same assessment year from other heads of income, will be allowed to be carried forward for 8 assessment years to claim it as a set off in the subsequent years. So 8 years you can carry it forward, not beyond that. Therefore, the loss of house property of previous year 15-16, which could not be set off because of absence or inadequacy of income of the previous year 15-16. So 15-16 you try to adjust, but still there is a loss. It may be carried forward for 8 assessment years succeeding the year 16-17 to be set off from income from house property. So you can continue for 8 assessment years. Provision for 80 and 139.3 are not applicable, as we already discussed. That is, loss under the head income from house can be carried forward even if the return is not submitted in the 139.1. Although loss is allowed to be carried forward for 8 assessment years, it must be set off in the subsequent assessment year where there is income under the head house property. Mind you, carry forward, when you do, you can adjust only with income from house property. You cannot adjust with some other head. Therefore, only intra head is available. Only intra head is available once you carry it forward. Inter head is available only in the first year. After that, it's not allowed. Therefore, what they are saying is, once you start carrying forward, the next year you are having income from house property. You'll say, no, 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 this time I've got already a lot of income. I don't want to adjust, or I don't have much income. This year I will not adjust. Next year I'm expecting more income. In that next year, I will adjust this loss. That cannot be done. The moment you have income, you have to keep adjusting the loss. You cannot postpone your adjustment of loss. That is what they're saying. Next is business loss. So we have seen house property. Now we are looking at business loss. What are the rules for carry forward and set off? Where the loss under the head profits and gains of business other than loss from speculation business, because this is not, now mind you, now we are segregating between business loss and speculative loss. So this is profits and gains other than speculation loss. This is called business loss. Could not be set off in the same assessment year because either the SC had no income under any other head or income was less than the loss. Such loss which could not be set off in the same assessment year can be carried forward to the following assessment year and shall be set off against profits and gains of business of profession subject to the following conditions. Now, mind you, your business head, you've got two types. One is, as I told you, speculative. This is non-speculative. Now we are talking of the non-speculative. That is called business loss, mind you. Speculative, we have to deal with it separately. What are the things? Business loss can be adjusted only against business income. So in the future year, not in that year. In that year you can do. So basically this is only intra-head is possible. Within the head is possible. Loss carried forward, the loss can be carried forward to the same to the subsequent assessment year and set off only against business income of the subsequent year. It may be observed that the same assessment year loss from business can be adjusted against income from any other head of income. However, when the loss is carried forward to the next assessment year, it can be adjusted only against business income. Business income may be from same business in which a loss was incurred or maybe any other business, but it should be business income. So only intra-head is allowed. Next, business in respect of which loss is incurred may or may not be continued. Suppose you are doing provision business and you incurred a loss. Then you carry it forward the loss. Next year you are doing some electronics item and you are making a profit. You can adjust with this. You have discontinued the business, still you can adjust the loss. Earlier there are certain restrictions, now that restriction is not there. That means you don't have to have the business in which you incurred the loss. Now, another issue is that the loss can be adjusted only by the assessee, nobody else. Where a person carrying on the business has been succeeded in such capacity by another person otherwise than by inheritance, nothing in this chapter relating to set off and carry forward shall entitle any other person incurring the loss to have been carried forward and set off against the income. In other words, brought forward business loss can be set off only by the same assessee. The assessee who has suffered the loss, in whose hands the loss has been assessed, is the person who can carry it forward, and the loss set off can be done against his business income in this. But there are certain exceptions. Where a business is carried on by one person, is acquired by another person through inheritance. For example, X is carrying on the business and there are losses to the extent of 5 lakh, which is carried forward and set off against income from subsequent years. X dies and his son S inherits the business. The loss incurred by X can be set off by his son S against the income of business activity carried on by S. However, such loss can be carried forward by the son for the balance number of years for which the father could not carry forward. For example, father has already claimed out of 8 years, 4 years he has already claimed. You are adjusted it. Now the son can carry it forward only for the balance 4 years. So total put together is only 8 years. However, unabsorbed depreciation cannot be carried forward by the legal heir as inheritance is not covered under section 32. So these are all important issues. Read it again, read it and again, clear it. It's all simple language only, you can understand. I'm just reading it through. Actually, you can read it and understand. There are other situations where still this can be adjusted, even though it is not the same owner. As we have discussed, amalgamation. A has been taken over by B. A has been taken over by B. The loss of A can be adjusted by B because it's an amalgamation. Therefore, in that case, business loss and unabsorbed loss both can be set off against the income of the amalgamated company. Amalgamated company is B. Amalgamating company is A. Same with reorganization, where proprietary concern is being succeeded by a company or a firm. So P, a proprietor, is being succeeded by a partnership firm. So there is a loss here that can be claimed by the partnership firm. Loss on a demerged company, again like amalgamation, demerge means splitting. So in that case also it can be adjusted by the resulting company. I'm not getting into detail, you can read it because it's the same thing is getting repeated. Now the question is, for business loss, how many years carry forward? Each year of loss is a separate head, and no loss shall be carried forward for more than 8 assessment years immediately succeeding the assessment year. We have seen that, for which the loss is first computed. Therefore, loss of 15-16 for assessment year 16-17 can be carried forward till assessment year 2024. Besides this, the following can be carried forward indefinitely. Here there is a restriction for business loss, but within that, unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed expenditure on family planning, they can be carried forward indefinitely. There is no restriction. Now comes order of set off. How do we set off the losses within this head, business head? This is the order of set off. I'm not getting into too much detail. The order of set off is like this. When we do a problem only, you will understand this. Current depreciation, current year capital expenditure on scientific research, current year expenditure on family planning, brought forward business or professional losses, unabsorbed depreciation, unabsorbed capital expenditure on scientific research, unabsorbed expenditure on family planning. This is the order of set off. The return or loss, again, we have already discussed that return has to be filed. That I'm not getting into that. Now we look at speculation loss. So we have seen, if you look at it, House property, business loss, speculation loss. We know that speculation loss, when it is there, it can be set off against only another speculation profit. So another speculation profit only you can do in the same assessment year. So the same restriction will continue. If a speculation loss cannot be set off from the income of another speculation business in the same assessment year, it will be carried forward to be set off in the subsequent year, but only against income from speculation business. Such loss can be forward only for 4 assessment year. It may be noted that it is not necessary the same speculation business must continue in the same assessment year in which it is to be set off. As already discussed, all these are compulsory, that due date, filing of the return before the due date is necessary. Further, where any loss arises from illegal speculative business, it cannot be carried forward to the subsequent assessment years and set off against profits and losses of speculative. Loss of in speculation may include loss on account of bad debt, irrecoverable debt, etc. Now, capital gains, again, same logic. Where in respect of capital gains, what is the restriction we saw in that assessment year in which is incurred? What happens? Suppose you have got short-term capital loss. It can be adjusted with the head capital gain, whether it's short-term or loss. Same thing will apply for carry forward also. Similarly, long-term capital loss can be adjusted only with long-term capital gain in the next year, carry forward after carry forward. So the same restriction continues for carry forward and set off also. Such losses cannot be carried forward, can also be carried forward maximum of 8 assessment years immediately succeeding the assessment year in which the loss is first computed. Hence, however, here it is necessary that return or loss to be furnished before the due date. So that all is same applicable. So current year, whatever is restriction will continue when you carry it forward and set off. Same year also, set off and carry forward of losses from activity of owning and maintaining resources. Loss from activity of owning and maintaining resources in any assessment year shall be set off against the income from activity of owning and maintaining resources in the same assessment. This we have already seen. But if any loss from that is not able to be set off in that year, then it can be carried forward. For how many years? You can carry it forward. How many years? So it can be carried forward for 4 assessment years. And when you carry it forward, it can be adjusted only against activity from owning and maintaining resources in the subsequent year also. During the year in which you incur the loss, you can adjust with that. Even for when you carry it forward, you can adjust with that only. And you can carry it forward for only 4 years. Again, filing of the return is necessary. Same thing we are repeating. Brought forward loss must be set off. This we have already seen. The losses which are eligible to be carried forward must be set off against profits or income in the immediately succeeding year. And if there is any balance still to be set off, it should be immediately set off in the next succeeding year when the time is allowed. Where losses incurred are not set off against income from property of the immediately succeeding year, as the case may be, they cannot be set off at a later date. The moment you have profit, you have to adjust. You have to adjust and do it. You cannot say I forgot and all that. You may not be able to do it subsequently. So that basically completes our set off and carry forward. Some small sections are there which not really relevant, but please read the provision. We will discuss some of the problems in the next class, including your clubbing also. So please try out the problem, and then we will discuss we will try to discuss the problems.